As we start 2025, I've got 5 wild, surprising stats about the stock market to help frame your perspective as we go into the new year. That and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. You know, as a long-term investor, you've got to drown out the noise in the short term, right? In the short term, there's plenty of reasons right now as we stand, as I record this video at the beginning of 2025, to be optimistic about the year ahead, and yet just as many reasons to be cautious as well. However, that's in the short term, right? And we don't know. We just don't know what lies ahead for 2025 or even the next quarter or a few quarters. And so as a long-term investor, you've got to stay the course. You've got to be disciplined, drown out that short-term noise and those distractions. Maybe it can help frame your perspective or help brace, have you brace for what could be lying ahead. But stay the course. Stay disciplined and stay the course. As I say that, it really has been a remarkable couple of years in the stock market, certainly 2024 as well as 2023. And as I'm bracing myself and looking for, doing some research for the year ahead, a few stock market stats were pretty surprising and help frame my perspective as we go into the new year. Wanted to share them with you as well to have you have the right perspective also. First is the overwhelming outperformance and disparity between growth stocks and value stocks. If you look at the stock market, it's actually broken up into a few different categories. First, you've got large cap, mid cap, and small cap. But then you also have growth, blend, and value. And this is maybe a topic for a different video and what distinguishes between those. But growth stocks are those companies that maybe don't have as high of profit margin today, but they are invested into some pretty significant and exciting things to help them grow for the future. Think NVIDIA or tech stocks, okay? Value stocks, on the other hand, tend to be more staple and more maybe not as much growthy and innovative for the future, but more you're looking at, well, is their revenue growing and so on, and what's their stock price compared to their fundamentals, okay? So that's value investing. Well, normally these two go hand in hand and sort of back and forth. And if you own a large cap S&P 500 index fund or large cap mutual fund, then you're going to own a blend of each of these, growth and value. And they go back and forth in which one is doing better than the other. But what's been surprising is how significantly growth has outperformed value last year, but also really the last 2 years. Growth outperforming value by 19% last year in 2024 and over 31% in 2023. That's the biggest 2-year outperformance by growth over value in history, surpassing the prior record, not great company, of right before the tech bubble, or essentially in the tech bubble. So that's one thing to watch. And it's also worth noting that that comes on the heels of a very, very, stark pendulum swing where value outperformed growth significantly during the challenging 2022 time period. Next surprising stat to me, and it's surprising because it just keeps on going, and that is the concentration of the S&P 500 index. And the S&P 500 is made up of about the 500 largest companies in the US. And you'd think, well, the index is 1/500th of each, right? They each get an equal weighting. That's not the case. It's cap weighted, which means, well, the larger the company in that 500, the larger the proportion, the ratio. So it's not 1/500th to each. The larger companies, right, get a higher percentage or make up a higher percentage of the S&P 500. It's not equally weighted. Well, the larger keep getting larger, the fat keep getting fatter, and we are now at rivaling the second highest concentration ever in history by the top 10 companies out of the S&P 500. Get this, the top 10 companies out of the S&P 500, out of the 500 companies that are in the index, make up over 38% of the entire index. That is as top heavy as it gets comparing to and rivaling, I believe, and I don't have the numbers right here, but I saw some other charts that suggest this, it's still second highest just to the Great Depression. Right before the Great Depression, apparently there was this similar concentration risk, and obviously markets were very different back then, so might not even be a fair comparison. You might say then, in sort of recent history or modern times, it's the most top-heavy, the most concentrated the stock market has ever been. And speaking of, NVIDIA actually had an unbelievable year in 2024 and has some, obviously a lot of optimism surrounding it for 2025. NVIDIA's stock was up over 100% in 2024, and that one company alone, the one company alone accounted for over 22% of the return of the entire S&P 500 index last year. That is incredible. The S&P 500 index was up 25% even last year, and a quarter of that was from one company. Out of all 500, a quarter of it was from just one company. In fact, the Magnificent Seven, which is NVIDIA and Tesla and a handful of others, 7 companies made up over half of the return of the entire S&P 500 last year. And continuing that theme, this one was surprising to me. That, would you have guessed over the past 5 years, Texas Roadhouse would have been a better investment compared to Amazon, compared to Apple, compared to Netflix, Meta? That is shocking, right? And it sort of shows the just how surprising and how strange the stock market can work over time. I don't have a chart of it here, but it reminds me of Domino's. Since Domino's went public several decades ago, when you compare that to a few of these tech giants, Domino's has outperformed almost all of them, short of NVIDIA and a few others. So, but this chart really stood out to me. Sometimes markets do act sort of irrationally or in a way that you wouldn't logically comprehend, and yeah, with all of the growth, with all the what Apple has done and what Amazon has done even over the past just 5 years, yet Texas Roadhouse stock has outperformed each of those tech giants. And then finally, all of that leads me to this question that I'm getting a lot. I'm assuming you're asking it as well. And well, if we're focused on investing, and yes, we're investing for the long term, but if I'm trying to have some perspective for the short term, I know the stock market did really well in 2024, and it did really well in 2023. So what comes next? And no one knows. History, though, after a 20% return in the stock market, history suggests the stock market is still poised for even more returns. But what about 2 consecutive years, back-to-back years of greater than 20% growth? Well, only happened 4 other times since 1950. And shockingly, guys, that after back-to-back returns, back-to-back years of greater than 20% returns in the S&P 500, all 4 times, the stock market has been positive again in that third year, averaging up 20% in those 4 time periods. Now, again, even if you say, well, just strip out that back-to-back, and what happens after a 20% or greater return in the S&P 500, odds very, very strong that the stock market will have another good year and averaging up just under 10%. So while there's lots of reasons to be optimistic in the short term and lots of reasons also to be cautious and pessimistic, that top heavy and concentration risk and outperformance between growth and value, those sorts of things. The point is, as a long-term investor, stay disciplined, stay the course, make sure that you've got the right investment strategy, if not multiple strategies, for the proper diversification for your specific financial situation and financial plan and your own risk tolerance. So make sure that you're working with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.